I want to talk about crypto, kind of fundamentals, more so how you might think about these tokens beyond just the price action. We'll dig into that in just a second. But before we do, post FOMC here, and just given what's happened in the market recently, I want to take a look at what's going on. So here's our market map, a little bit of market awareness. We'll use Bitcoin as the proxy for all of crypto because its market dominance right now is at a one-year high, is at almost 50%. So what that means is that Bitcoin, in terms of its market cap relative to the total market cap of crypto tokens that are available, it's 50%. So we've talked about this concept of different points in time where maybe you want to be long all of the altcoins, you want to be long Ethereum versus Bitcoin. Now, it doesn't really look like that's the time. Certainly it could change, but you've got this concept of almost the Bitcoin kind of wrecking ball, in the same way that when you look at currencies, the dollar can just have these periods of strength that blows up everything else, these risk-off periods. You're seeing that in crypto here when you look at Bitcoin market dominance at 50%. But oddly, given everything that's going on, implied volatility, and I think this speaks to what you guys are talking about in the traditional financial markets, implied vol is really at the lows. If we were to rank Bitcoin 30-day implied vol at 48%, it's almost zero in terms of an IV rank. The low in there was earlier this year at about 46. But when you look at that 48%, what can you expect? About $1,600, $1,700 in terms of the 1 week expected move to the upside or the downside. And then really quickly, when we look at relative performance, that's what I'm talking about versus Bitcoin. There's not really anything that looks good at all right now. The wrecking ball is coming through. And then I think it's important too. I tend to look at, what's the correlation to some of the larger macro drivers, the dollar being important in my opinion, interest rates certainly front and center here. And, maybe at the end of the day, what's this really dependent on? Well, it's priced in dollars. And if we do see continued dollar strength here, dollars rallied a little bit over the last month and a half. You look at that 90-day correlation, pretty strong inverse correlation there. So a couple data points, hopefully for everybody to put a little bit of perspective around what's going on, how to manage risk in the market.
Yeah, it's good.
So that said, let's talk about crypto fundamentals. And we're getting into this territory because I want to make the conversation engaging. We're running out of topics that I suppose are easy to talk about without getting into the technical weeds.
Okay.
So I'm going to talk about fundamentals here and how you should think about this, because otherwise it's just these prices. Some are more volatile than others and they all go in one direction all at the same time. So can we take a fundamental approach to analyzing blockchain networks and cryptocurrency? How should we think about this? Aside from simply tracking the price, we can look at, or might consider looking at, what I'm calling fundamentals. I'm just bucketing everything into this category. So on one hand, you have financial metrics. So that might be very straightforward market data. That's going to be the amount of tokens outstanding, your market cap as a result, volume, some financial ratios that give us some sense of, which tokens are relatively cheap or expensive, in the same way that you might look at a PE ratio.
Yeah.
The other thing that you can look at, and I think is maybe more important at this stage, are the on-chain data points. That's that on-chain activity, the amount of transactions, the addresses, how much value is being transferred on chains. And that's the way that you can then take a little bit more of an apples to apples comparison when you're looking at blockchain networks. They're not all the same, obviously, but when we look at some of the more popular ones, we have people that are fans of Cardano, Bitcoin, Ethereum. How do we think about these things when we look at them compared to one another? So to start off with, if we just focus on some of the financial metrics, and I'm sure this is going to be obvious and straightforward for most people watching the show, but we want to look at trading volume, market cap. The most important thing, as you guys have said many, many times on Tasty Live, is liquidity. You have to be aware of whether that token you're interested in, regardless of what the story is and what you think about the future prospects for it, is it liquid today? Can we get in and out of this at a price that's fair? And so you want to focus on the trading volume. You want to look at the market cap as well. So that's just simply the circulating supply times the current price. But there are some dynamics to market cap that we'll talk about as well, because some of these tokens, you have a circulating supply of, let's say, 300 million, but the total issuance over time could be 500 million, could be 600 million. So as you see these token unlocks, there's the potential for, a lot of selling pressure to occur as a result. In the same way that you see some of that at times in equity markets.
What do you think the minimum market cap you need to trade some of this stuff is?
Oh, I mean, I would probably stay away from anything that's under $1 billion.
Oh, yeah, at least.
In terms of trading, right? If you're investing in this because you think, look, this is, binary, it's asymmetric, I want to be long this for 5 years, it might not matter as much. If you're trying to trade this on a day-to-day, week-to-week basis, then it's tough, I think, outside of the very biggest here, which is Bitcoin, Ethereum, and a couple of others. There's just not a lot of liquidity. And when we look at the market cap too, and where that liquidity is, it's very fragmented. It's not the same as what you would see in financial markets here, where you have best bid offer, where you have kind of that consolidated book. Here you have a centralized exchange, you have decentralized exchange volume. So you put it all together and you can get the appearance of liquidity, but it might not always be the case relative to where you're trading. So important to pay attention to there. And then some of the other things that you might want to look at, just the volume, versus market cap. So that daily volume, what is that as a percentage of the total market cap?
How do you get daily volume?
So that's going to be available through a variety of sources. I think a great, free source is coinmarketcap.com. So there's a lot of different websites like that are going to aggregate all of the activity across exchanges to the extent that you can and give you that kind of consolidated view of it.
So like how much is the market cap right now in like Cardano and Solana and things like that?
Yeah, so if we look at the next slide here, the market cap of Ethereum, 197 billion. Binance chain, so that's going to be your BNB token that's had quite a lot of volatility here given the recent news. 36 billion. Cardano is 9 billion, and then Solana is 5 3/4, almost 6 billion. So these are small, really small. When you look at these,
the Binance chain is 36 billion
in terms of the market cap of the token. Yeah.
How much of it do they own?
It's a good question. I don't know. But that is important to pay attention to as well. So when you look at the addresses that hold these tokens, is this widely held among a variety of users, of investors, or is it just a couple of wallets that are whales that have most of the
What was your point
issuance?
about the Binance chain? Were you saying that since they created it,
Yeah.
it's like,
Yeah.
making your own dollar?
Don't you think it's a little weird?
Like Dracula watching the blood kind of thing?
Yeah, like how much is the Tony Batista chain worth?
Right.
You know what I'm saying?
50 billion, just to put it out there.
Well, I think if you follow certain people on Twitter, there is some speculation that Binance might actively be trying to protect the value of that token at certain levels.
Imagine they would.
Why wouldn't they? Right. But I'm just saying. I'm just surprised. I mean, we saw what's the FTX token worth now?
It's pennies. I think it's less than $1. I'll
Okay,
look it up.
I don't care.
Even
Yeah,
paid attention to that.
But
nice scalp size. If I'm contractually obligated to do that.
Yeah, I've got FTX token FTT 91 cents, 13 million in 24-hour volume.
And why is the Cardano? It's really interesting because I've never seen this before. But why is the Cardano ratio so low? Like the fees to the market cap, price fee ratio for Cardano?
Oh, I would say it's really high.
High. When you're saying low.
3,165.
Versus 70?
No, what they're saying there is the price to fee ratio, it's...
The price of Cardano is very low. The fees are very high.
No, the other way around.
Yeah, I would look at this as almost like a PE ratio. So that's your multiple. So we've got a market cap, 9 billion large. The fees that blockchain is generating on an annualized basis, if we extrapolate it, 4 million.
It's only 4 million.
Yeah, so
it's tiny.
The argument might there be, if you're just looking at that single data point and saying, okay, given the fees or the revenue,
the fees are super low.
Yes.
Yeah, not high. They're super low. So that 331.65 number is like ridiculously low compared. That's the ratio. So it's crazy low compared to everything else. Like ETH is generating $2.9 billion on a $197 billion market cap, but Cardano on a $9 billion market cap is only generating $4 million.
Oh, it's million. I was thinking it's billion.
No, it's only million.
Sorry.
So it's a tiny little number.
Sorry.
And Solana.
It's billion for Ethereum. It's millions.
Yeah,
for
but
the
Solana,
rest.
worth almost $6 billion, is generating, 3 times what what Cardano's doing.
Yeah.
So I feel like that's
still trading at a pretty arguably expensive or high valuation relative to that single data point, I think.
No,
right?
I know, but my point here is just that it seems on paper, if you looked at this, you'd be like, well, I would rather own Cardano than anything on this board.
No, if I'm looking to get fees, the fees would be.
No, I'm not. No. This is fees going back to the network, right?
Yeah, these are the fees.
Yeah, no, you'd want the lowest.
Right,
by the network.
Yeah.
Well, I would look at it more like if the network itself is a business, what are its sales? What's its revenue? So this business that's valued in the market at $9 billion is generating $4 million in revenue versus Ethereum, valued at 197 billion, generating almost 3 billion in revenue.
Right. Well, you could look at it a bunch of different ways. I mean, to me, it's technology. So I would look at it and say Cardano is grossly underpriced relative, or much cheaper relative to ETH, which is much. I mean, yeah, they make way more money in Ethereum right now. They generate way more fees, but that doesn't make it a better buy.
Right. Absolutely. I think in one sense, Cardano here is the growthiest of growth stocks, I suppose, with a multiple of, it's not perfect. This is just a single data point.
Yeah, I understand. It's just interesting. I mean, I'm long Cardano, Solana, ETH, and Bit. I don't have any Binance.
Okay. Yeah. Neither do I. I don't. I think for a lot of people, at least in the U.S., it's tough to access that. I mean, it's not something.
Yeah. And why did you have Bitcoin on here?
So I wanted to look at layer one blockchains, proof of stake consensus mechanisms.
Got it.
So these are going to be chains that kind of have that Ethereum virtual machine or more of that execution layer compared to kind of the value transfer, the proof of work chain that Bitcoin is. But you would see that Bitcoin certainly is the largest market cap and going to be at the top there. But yeah, where were we? I apologize. I lost my place here.
No, keep going.
When we look
Don't worry, we have that effect on everybody.
Okay.
Tom told me today I'm confusing everyone.
Well, I'm in good company then. So some of the things that you want to look at are obviously those just financial metrics. We want to pay attention to volume, market cap, right? Is this liquid? What's happening on chain?
We only care about liquidity.
Right.
Yeah.
So once you've determined that, how else can we start to look at these things? The other thing that you might want to pay attention to is that on-chain activity. I think that's really important when you're looking at a lot of different networks or blockchains here that have started around the same amount of time, because it gives us a sense of the adoption. Is this network alive? Might be some great ideas, fantastic white paper, but is anything actually happening on the network? And so some of the things that you can look at: active addresses. So this is going to be the number of addresses that are transacting on chain. You could see in one case you have, let's say 1 million addresses that exist, but only 1,000 of those are active. That's going to be a lot different than if you see 100,000 of those addresses are active, obviously. You can look at transaction count, and given the transparency of blockchains, you can see, again, what's happening, how much value is being transferred across this network. And then the other thing you might want to consider when you're just really trying to analyze these, what's that transaction throughput? What's the transactions per second? What are the associated network fees? I don't think that's a data point that will help you determine this is a better blockchain than another, but it gives you some more context, to give you some more information around just what's the cost to interact with this, given the use cases that exist. Will this chain be better for XYZ use case compared to another chain? So those are some of the things that you can look at. And if we jump to the next slide here, we can do a little bit of a comparison. And this is not perfect. In some cases, the data is not the easiest to find. But when we just compare some of these more popular networks, we can see that Binance Chain has a lot more activity compared to the Ethereum, Cardano, and Solana networks if we're just looking at the number of active addresses. For context, on Ethereum, I think the highest number of active addresses on a daily basis was like 1.4 million. So certainly when you see more volatility in the markets, certain things happen. Obviously more people become active there. But when we look at transactions, those are the active addresses, the daily transactions as well, and then the value that's being transferred across those chains is important to pay attention to. And I don't think it's something where you're saying, okay, Ethereum's better than Solana because it has a higher transaction value. It's just something to pay attention to kind of more so be aware of.
Yeah, sure.
In that sense. The other thing that I think is important to look at, because I've always argued that as there's more utility, more development activity, that's going to signal that maybe this is a better investment or this is just a place that you want to be when you look forward. And so when we look at the amount of DeFi activity that's happening on these chains, because they are EVM compatible, you wouldn't see this same thing. You don't have DeFi on Bitcoin in that sense. But when we look at the total value locked, Ethereum just absolutely dwarfs everything in terms of the amount of capital that's locked up in these DeFi protocols. It also has the most protocols, so that makes sense. There's 730 protocols there compared to Solana that has 98. So arguably, at this point, Ethereum is a much better place for DeFi compared to Solana. It's not a knock on the Solana network. It's just there's a lot more DeFi activity occurring on Ethereum. And so again, it absolutely dwarfs those other chains, but it's also important to note just how much destruction has occurred in this space. And maybe it's just representative of how much froth there was, but when we compare that total value locked right now versus the all-time high, everything here follows price as well. These tokens are down 60, 70, 80%. The amount of activity, the total value that's locked in these chains is down around the same. That said, Cardano is growing, or it has been increasing off of the lows. So even though it's 60% off of its TVL high, going back to the beginning of the year, we've seen an increase in TVL. So that's maybe the big takeaway. You want to pay attention to the rate of change like you would in kind of any other macro approach.
Sure.
We want to look at not so much, where this number is, but put context around it and understand the rate of change that's happening as well. So those are a couple of the metrics that I wanted to look at and just hopefully point people towards. It's not a perfect approach. In many cases, given the technical differences between some of these things, it's not always going to be apples to apples. But if you're trying to put some perspective around this and you're trying to think about blockchains a little bit more than just the price action, these are some of the things that you can look at. But first and foremost, you want to make sure that what you're trading is liquid.
Good job. Good job out of you. Well done. Never look at it that way. Learned a lot of things.
Cool. Well, thank you guys.
Thanks.
Good job out of you. Good job out of you too, Sal. No, even the S&P's up.
I never would pick a crypto. I would never pick a crypto based on any of like the fundamental, other than liquidity. But I would pick it. I mean, isn't it more of like the technology? Isn't it really a technology play?
It is, but I think how do you understand whether or not that technology is being adopted, right? I think this is really like, if you look at the value of these things, the best way to probably approach it is from Metcalfe's law, the network effect, right? Where you can then understand, okay, is this something that's growing in the same way that you would look at, the value of a telecom.
I got it.
Communications network. But by measuring some of these on-chain data points specifically, I think you can get a good indication then of, is this technology something that's being adopted by others?
Okay.
But yeah, I absolutely agree with you. I mean, it's about the tech at the end of the day, and I think that's why you see Ethereum at this point. And it was, obviously, it launched prior to a lot of these others, but because of that tech and the use cases, it's the biggest in my opinion.
You got it. Thank you.
Thank you, my friend. We're going to take a quick 90-second break. We'll come back. Even the S&P is trading near their highs of 20 handles. Just Tasty Live. We got a market measure next.
A Tesla up on the day.